Hey, everyone, and welcome back to another episode. Today, I've got Erin Helle on the show. Erin Helle is graduated from the United States Military Academy at West Point in 2009. She has a master's science degree in management from Austin Peay University. She's got a doctor of business administration from Apollos University. She is a self-made millionaire who's achieved financial freedom through real estate investing in less than 4 years. I cannot wait to jump into that today. To date, she's helped over 300 other investors build cash flowing real estate portfolios. She is a U.S. Army veteran, and she has over 94 rental units. Her courses and mentorship programs empower investors to dream big and ruthlessly pursue their goals. And she's got a personal goal of creating over, a million millionaires. Dude, this is so cool. Erin, welcome to the show. It's great to see you again.
Thank you. It's so great to be here.
Yeah. So let's take us back real quick. So we know a little bit about you, what you're up to today. Give us your background and your story and how you got to this point.
Yeah. So 5 years ago, this month is when I closed on my very first single family investment. But we all know that's not where it started. I spent probably 2 years in analysis paralysis before that. And a lot of years just thinking about real estate and wanting to flip houses and wanting to invest. And I just honestly never really had a clue where to start. And so I was serving on active duty in the Army, thinking I was going to make a career of that. And about 8 years into my career, we had our first daughter, and my husband and I were supposed to deploy at the same time, like the same month we were going to leave her. She would have been 6 months old. And I could hardly leave her at daycare, like down the street from where I worked. And so I knew that I wasn't going to be able to leave her. And I had already completed my service obligation. I didn't owe the Army any time. So I literally resigned the next day. I committed, I went home that night, talked to my husband. I said, I'm out. I'm going to resign tomorrow. Luckily, the Army was downsizing. So it was a super easy process. My paperwork got signed and I was out like 6 months later, which is a very quick turnaround for a transition like that. And I realized a lot of things in that transition, but the biggest thing I kind of took away was that the Army didn't care about me. I gave every single thing I had, my whole entire life to the Army. All of my adulthood, I went to West Point at 18 and I served from 22 to 30 years old. It was all I knew. It was all I had. And I left with literally nothing. And because I didn't retire, nobody really cared. I don't know that people even care if you do retire. And I just kind of realized people don't care. The Army doesn't care. No one's going to take care of me the way that I would want to be taken care of. And it was really eye-opening for me, obviously really discouraging, but also encouraged me to kind of do my own thing and make my life what I wanted to. But of course, that was easier said than done. So I kind of hung out in analysis paralysis for a couple of years, trying to figure out what to do and really how to make these big dreams I had into a reality. And sometimes, you take a big step back before you're able to make that progress, because you start listening to all these podcasts and you start reading this stuff. And it sometimes just seems like it's not something that you can accomplish. But once I finally put one foot in front of the other and made progress, 5 years later, here I am. We actually have 95 units and we're almost multimillionaires. Our net worth is close to 2 million, which isn't huge for, people that have been doing this kind of thing. I certainly could be significantly more successful, but I think what's important is I'm living the life that I want. I hang out with my 2 daughters all the time. I drop them off at school, pick them up at school, do all their activities with them, coach their sports teams. I'm able to give them everything. And that's why I want to do this. So that's kind of what led me to where I am today.
Quite the journey. I want to jump into the topic that caught my attention. So you did your dissertation on investor psychology. I'm sure this was probably part of your doctorate at Apollos University. Is that right? Yep. So you did it on investor psychology, and then you had a focus on the differences between men and women investors. Unpack this for me. How did you decide that this is what you wanted to study? And then tell us more about this investor psychology dissertation that you did. I'm very interested.
Yeah. So this was such an interesting thing. It really morphed. When I started studying for my doctorate, it took me, I think, 5 years to graduate. The dissertation itself took me almost 3. And part of it was because COVID almost shut down my school. And I had to literally start the whole process over because 2 of my 3 committee members resigned or were let go from the school during COVID. So it kind of morphed over time. But I started studying like women in the military because that was something I was really passionate about, sort of in my past life. And I got bored of it pretty quickly. So I switched over to like investor psychology. And this is because I had started coaching investors at this point, and I was like trying to figure out why people were doing the things they did or were not doing certain things. And I thought this would be like a pretty good, opportunity for me to learn something that I had to for school, but also help me with my career and where I wanted to go. I hadn't intended initially to study to like essentially look at men versus women, but I went into this assuming that women were not as good as investors. And I had this assumption or this bias because of the way that we here in the United States look at the stock market or like investing as a whole. Like you look at Wall Street, it's all like men in suits and it's represented by a bull. And you look at like these stock, even just like different graphics and stuff, they tend to be really masculine. And we tend to like think about high risk and big reward. And it just doesn't seem to really cater to women. And that's changing. Like you're starting to see these commercials now where they're having husband and wife side by side, having conversations together, making decisions together. It's because the industry has realized what I learned in my dissertation, which is that women are actually significantly better investors than men. And when you compare us side by side, and it's hard to compare, right? You have to look at, most of the studies look at like a 30-year period and look at the growth over that time. But in every single aspect, women outperform the men, except for maybe if you were to look at like willingness to take risk. But because, for some, we sort of correlate that to like, and being a good investor means you're willing to take risk. Well, the data shows otherwise. That data shows that being able to stick to a plan and ride out the waves of the market is what is going to allow you to grow real wealth. And that's what women do and have done. And more women came out of the 2008 housing crisis, that recession, millionaires, than men, because so many men just jumped ship. Like they let go of their portfolio. They were stressed by it. They sold it off. They let it go and they moved on. They walked away with nothing. Whereas a lot more women held on and they rode that wave and they came out even wealthier than they were before. And so I think that that's because women tend to have a plan that's much bigger than just like building wealth or taking on something new or challenging. It's like based on their family or their future, what they want their life to look like. And then they make this plan before they take their first step. And then they stick to that plan. And that's what matters. And, I had this conversation with my husband the other day. He runs ultra marathons. He was telling me about this girl. I think her name is Courtney DeWalter. She's like a phenomenal runner. And she does these like crazy races, like 300 miles, 125 miles. And he said to me, when Courtney shows up to race, it's not if she's going to win, it's when she's going to win. He's like, she shows up, she performs, and she gets it done every time. And she most of the time beats the men. And he's telling me all about it. And I said, you're literally describing my dissertation with the analogy of running, because Courtney goes into these races with a plan and she sticks to it and it works out every single time. And she ends up just picking off these guys that get too ambitious, or they like get out of their comfort zone and they kind of bonk, like they die, before the end of the race. And that's, I think, exactly why women are able to be more successful as investors, because they're willing to stick to that plan and it pays off.
What were I guess I'm calling like key bullet points? I think you referred to them like aspects. You said 2 of them. One was the ability to have a plan, stick to it, and then the ability to take risk. What were the other metrics you were using in your dissertation?
Well, first of all, the stick to a plan part, honestly, is like my assessment. There's not really there's really not a lot of data to back that up. That's just from like what I learned and then the coaching that I've done. But yeah, the different metrics that they look at, of course, they look at like return. They're doing percentages based on what you've invested at year one versus, what you get out of it at the end. But they also look at like the turnover of someone's portfolio, like how often are they selling their stocks or how often are they selling off their portfolio. They look at the timing of those turns, in terms of like, when we anticipate a crash, who's selling and why and how much. So there's a lot of different things that they look at. And risk is something that's constantly sort of alluded to, but there's no data. You can't really, there's no metric to measure risk or measure willingness to take risk. So
yeah.
I just thought that was really interesting because they kept like, it's always alluded to, and it's like, it's almost like, I don't know. I don't know what the psychology is behind that, because I think we know as investors, like, risk isn't really a big part of it. Like once you're comfortable with investing, it sort of takes away a lot of the risk, I guess, in some ways, or at least like lets you hedge against it. But I was just always interested in the like undertones of risk, even though.
Yeah, it's very subjective. I mean, how do you measure risk? Maybe towards the beginning part of maybe starting the business or the investing journey, but you can't compare someone who's doing that versus somebody who worked in a particular field for 20 years and then they're going, you know what, I want to start my own business in this field, and they come into the field with a plethora of knowledge. Therefore, the risk is a lot less. It's extremely difficult to measure that. So it sounds like you were taking basically real data. So did you have like a pool of men and then a pool of women, and then you went and you looked at exactly how their returns were affected by their behaviors and decisions over a long period of time, and basically just compared the two, because you can't argue with the numbers, right? So you're taking probably similar men and women in age, I'm guessing, maybe even similar demographics, maybe similar areas, and then looking at their performance over a certain period of time. Is that?
Yep, that's exactly it. Yeah. And so there were 5 different studies. So a big part of your dissertation, like half of it, is your literature review, which is you just going and looking at everything that's already been published on the topic. And then your goal is to sort of fill the gaps, or to take whatever's been studied and deduced like to the next level, like take it another step. So 5 major studies took place from 1980 to about 2017. And they looked at, some of them were bigger than others. Like some of them looked at 30,000 investors. Some of them looked at 700. And then they just reported on all the data, how much they started with, how much they made, turnover, things like that. And then, I just compared the 2 side by side and just looked at the different things. And one of the things that I looked at, my study itself, in addition to the study of all the other data, was asking people, how were you raised to look at investing, and how were you taught in your house to perceive investing or your role as an investor? And interestingly, among like my age group, I'm 36, a lot of women said they were taught to save while their brothers were taught to invest. And that's similar to what, women that were 20, 30 years older than me were also taught. And I thought that was really interesting, because you would think that, it changed over time, but women are still being taught this same thing, that it's our job to find a spouse who can provide and make good money. And it's our role to sort of save that money. And it's the women's role to save it and be a good steward of it, but it's a man's role to earn it and grow it. Does that make sense?
Mm-hmm. No, it makes sense. Yeah, there's definitely some cultural dichotomies here when it comes to men and women investing. What I'm interested in is, so due to biologics, hormones, women tend to be, or are, culturally labeled to be more emotional than men are. But you said something that's different, which when it comes to the ups and downs of the markets, letting our emotions get a hold of us usually leads to bad financial decisions. That wasn't the case. The data says something different. What, like, how has that labeling kind of been flip-flopped on its head,
Yeah.
because you'd think women would perform less because they're hardwired to be more emotional, but that's not the case. They outperformed males in this specific.
Yes. I love that you brought this up, because what makes women able to be less emotional in their decision making, again, goes back to their plan. So without a plan, it's so easy to be emotional, right? Like, if you don't have a plan,
You're reacting.
Yeah, you hear, oh, Dave Ramsey says the market's going to crash, and you're like, I got to sell my entire real estate portfolio.
Yeah.
But that's if you don't have a plan. But if you do have a plan, you're like, okay, my plan is for 30 years from now, 50 years from now, generational wealth for my family. I don't care what's going to happen in the next 3 years or 7 years. Like, when we come out of it, it's what's going to matter. And so I think the reason that women sort of get painted as like being emotional and like trepidatious and like not willing to take a risk is because it takes a lot longer to put a plan together and put a plan in place and then act than it does to just act, right? Or like to validate your plan and verify your plan before you make a decision. And I think that's why women get this reputation of being emotional. Another thing that they do, which is a really good thing, is we bounce our ideas off of other people. We don't feel like we have to go it on our own. And this could be good or bad. Like, it's the same reason that women go to the restroom together. It's the same reason that women call their mom every time they have a decision to make, because we want to validate our next move, or we want to bounce it off of somebody. And this can go many different ways, but if you're bouncing your ideas off the right person, or if you have the right plan, then that's where the wealth is going to be built, and good decisions are going to be made. But I think because of those reasons, we paint women out to be more emotional. But I think a better way to look at it is just that we are more deliberate. And like I tell women all the time, like, because of the way you are going to be a good investor just because of those emotions.
Yeah. So it's the way to circumvent the emotional roller coaster ride and make those emotional decisions is to have a plan. And women tend to be better at creating that plan. And also what you just said, they tend to be a little bit more resourceful, seeking advice and wisdom in certain situations where men are like, oh no, I'm getting my ego in the way. I'm going to figure it all out myself, which tends to hinder performance. Two more things. And I want to get to your portfolio. I'm interested in this. So like, I go to a lot of conferences. I do a lot. I love investing. I've got, groups of friends that do investing. It seems that when I go to like conferences or masterminds, or, I discuss investing, I'm meeting with people discussing investing, it is a predominantly male dominated world. And, I live in my own world where I'd love for my significant other to be interested in this stuff, but it's just not, right. She's just not there yet, or just doesn't have the interest in it. Why do you think there is such a dichotomy in male and female when it comes to this world and investing? Because, the data's there, females have an advantage over males when it comes to this type of thing. Why, but why, like, where is the prevalence? Why do you think that is?
Yeah, I mean, I wish I knew that answer. I've had the same experience as you. And my husband he's in the Army. He's super busy. He's climbing up the ranks over there. He's very vaguely interested in real estate. I 100% drive this train. And he half the time doesn't even know what documents he's signing because he's not even interested. So, and I know that's different than in most like partnerships or relationships. And every time I go to a conference and I bring my husband, people will immediately start talking to him. And he's like, I don't know anything about it. We're here for her. She's the investor. Yeah. And it's super frustrating for me, just because it's like but it's just different. And I think that ultimately comes down to just logistics, to be honest. Like, the people that you're looking at that are going to these events and meetups are people that are our age, right? Like, people who a lot of times have young kids. And I feel like women stay home with the kids and women are just doing other things. I do think, though, that even though you're not seeing them at the events, they are going to virtual events. They are going to, things where they're sitting at home and they're able to do this kind of stuff from home. And that's just what makes sense for them. I also think men are social in a different way. and I have no data to back this up, just looking at like my own relationship with my husband. Like when we were working from home during COVID, I've always worked from home. I love working from home, never had any issue with it. He worked from home during COVID for like 8 months. He was miserable. He needed that like external, person to person interaction to do better at his job. And I don't know if that's it. Maybe men just are naturally more inclined to networking. But yeah, I don't know. I wish I had an answer. I feel like that would help, because I am promoting conferences now and hosting conferences. And I do know, though, this is sort of a tangent, but it is harder for women to invest in themselves. I know that without a doubt. Like selling tickets, promoting to women. I've done a handful of women's only events. Mm-hmm. Women are less willing to invest in themselves. And I think a lot of it goes back to the cultural stuff we were talking about and the way that that women are raised.
Mm-hmm. Yeah. Those decisions or the way that the circumstances that they're raised in dictate what happens later on in life. Well, darn, I was hoping that was going to be a really good lead up question to like, how do I brainwash my significant other into being interested in investing? I was like, do we have a formula we can follow there?
Well, I think you just got to find what she's interested in. So my husband could care less. I like to invest in C-class multifamily. That's my jam. That's where I'm most comfortable. Small multifamily. And I have a 10-unit property right outside of Fort Campbell where he works. I don't even think he's ever seen it. It's like $1 million property. He's never even seen it. He could not care. He drives past it almost every single day. Doesn't care. But when we started buying our short-term rentals, like our beach properties and our mountain cabins, then he suddenly got interested. So I don't know, maybe you just need to find out what it is that she is most interested in.
Yeah, and sounds like we're going to be buying some Botox and filler businesses down the road or something like that, because she's an esthetician and
yeah, you never know. I mean, I think there's more women interested in talking about this stuff and interested in talking the numbers than we like to think, because I talk about this with every single person. But you're right, like you do have to find the specific thing that they're interested in.
Yep. And then tap into it. I want to get to your rental portfolio that you've built up. So you're at 95 units. You did it in a crazy short amount of time. I think you said 5 years to the day, almost, something like that. So walk us through that. Like, what kind of foundation was set for you to be able to really scale this thing? Because I know that it wasn't, I'm about the exact same number of rentals per year. There was probably a ramp up period, which means you probably acquired the majority of that portfolio, I'm guessing, in the past 2 years as you really ramped up and scaled things. So what did that foundation and scaling process look like?
Yep. Yeah. So my very first property was a single family home, and my motivation, because I told you, I'd gotten out of the Army. So our income halved overnight. We went from making whatever to half of that when I got out. And I had saved like crazy when I was in the military. I did 8 years in the Army, and my net worth was 120,000. And then 5 years later, our net worth is almost 2 million. So, and I was a saver. And so I had this 120K that I worked so hard to save. And I thought I was doing so well at 30 years old. And I bought my first single family home, put like 60,000 into it. It was a new build right in Clarksville, Tennessee. And I spent like most of that money. I spent, probably 68,000 with closing costs. I put 20% down. And to this day, we've cash flowed like crazy. I don't think it's been vacant for one day. We're on our second tenant. It's been a great asset. Nothing ever wrong with it, because it's still, everything's under warranty. But I bought that, and then I was like, well, now what am I supposed to do? I just didn't know where to get the money from. I'm making $300 a month. It's going to take me 1 million years to be able to buy the next one. So I started, really diving into the podcast and trying to look into these creative strategies and stuff like that. And I discovered seller financing, and I bought a single family home that I flipped using seller financing. And I put all the renovations on a credit card. And then I found out you could self-direct your IRA. I had this money sitting in an IRA. Mm-hmm. And that the year before I self-directed that account, I had made in the whole year $800. There was about $70,000 in that account. And I self-directed it. And now I still own the same asset that I bought initially. And it makes that one property, that one duplex makes me $1,400 a month. So I made more in a month than I was making in a year before that. And then since that, I've, accumulated all that money and invested in a lot of other things. We've got like some crypto in there. We've invested in a fund and a 12-unit property in Jacksonville Beach, which was a syndication. So that's how that one scaled. And then after that, I truly ran out of money. I didn't know what to do at that point. I had everything that I had was invested in real estate at that point. And we were sitting on a personal residence. The Army moved us out to California and we had a good deal of equity in that. So we sold that and we bought a 10-unit. And so my first 18 months, I bought 19 doors, but then started focusing on flipping for a little while and sold all those properties and, sort of lost a little bit of time there and then sort of scaled up again and then spent some time wholesaling and lost a little time there and then scaled up again. So it has kind of come and gone in waves, but the first year of COVID, I refinanced everything that I had bought 2 and 3 years prior to that. And then I doubled my portfolio within a couple of months because I was able to do cash out refinances on all of them.
Okay. So you took your equity that had built from those previous rentals, refinanced out, and then used that cash as a down payment to continue buying. Yeah. That was my question. I remember when we were doing a lot of wholesaling and flipping, very transactional, you're making a lot of money and then you're also spending a lot of money. And, the reason we were able to do such high volume, which I don't know if you consider 40 or 50 units a year high volume, was because we had the equity in the form of cash when we sold it to continue the operations, to go out and find more properties. How were you able to scale your rental portfolio when you refinance out, you have to keep that equity in there. And usually when you're doing some kind of scaling, in my experience anyway, there's some kind of marketing involved, right? You got to build the top part of the funnel. You need leads to chase and close, but it seems very difficult. If we had just refinanced every property that we had, put under contract to flip it, we just wouldn't have been able to do the same amount of volume because when we refinanced, there wouldn't have been enough cash available had we sold it to continue operations to keep going at the level we were going. So how did you circumvent or navigate that problem?
That's such a good question. And I sit here and I'm like, I don't even know how I've made it happen, but it's I just do. It's you find the deals and then you find the money. We tapped into a HELOC. So we got a HELOC, a home equity line of credit on our personal residence that we used a VA loan on a couple of years ago. So we put no money into it. And then we got a HELOC and we pulled 30,000 out. And so what I am currently doing is I'll use that HELOC to buy for the down payment on the next property. And then, usually need a little bit more than that. And then I pay that HELOC back as quickly as I can. I try to cycle my HELOC once a quarter. So I put everything I have into it, all the money I make from as a real estate agent, as a coach, as on social media, things like that. And it all goes into it. I have my reserve limits every month. Once my accounts hit that, I'm sorry, I do this on a weekly basis. Once they hit that, everything else goes to the HELOC. I pay it down. We bought only 2 properties so far this year. And it's honestly because we're just having a hard time finding deals. But I used a HELOC on one of them and then just paid that off. So we're ready to use that again. And then we bought a BRRRR deal. We're renovating a property we're going to keep. And I used 100% financing on that. So I just had to pay fees, which ended up being $8,000 out of pocket. The lender's paying for all the renovations. So, I just keep sort of recycling that money and putting everything toward it. And then, I would love to tap into some of my equity right now, but I just can't. My rates are stupid. My best rate, my worst rate is 4.75%. So refinancing right now is just not an option. It's just not worth it. Especially once you realize you build a big enough network and you build I'm a realtor. I have a ton of realtor contacts, a ton of wholesaler contacts. I spent time wholesaling, finding deals and then finding the money is or, you know, the way to take it down, whether it's seller financing or a HELOC or just borrowing capital from someone for a short period of time.
Mm-hmm.
I feel like I've gotten to the point where I'm willing to just ask for that. And I have goals that are big enough and that I'm willing to pursue enough that I'm like, I found the deal. I got to figure out how to take it down. And then I just move on. And I don't know. It's just amazing how it happens.
Yeah, you set the parameters of which you need to succeed in, and then you just figure out how to succeed in that. We just didn't set those parameters because we didn't know it was a thing. I love it. So I know that you've got a summit coming up and that you also have your own agent business too. Is that right? Talk to us a little bit about that. Like I know you said that you're recently kind of semi-retiring from like the more like one-on-one, book a call now, you know, coaching more potentially higher end stuff. What do the next steps look like for you? What's the future?
Yeah. So I want to just really get back to working on my portfolio. So that's my number one priority. And I love to coach. I love to mentor. I love to just have these conversations all day. So instead of doing the one-on-one coaching, I'm shifting to a conference model. Just hosted a conference like 2 weeks ago here in Pleasant View outside of Nashville. And it was awesome. Like the vibe in the room, I can't even describe what it's like to be at a conference. It's just awesome. And so I've hosted like 4 of those. I'm hosting my biggest one in Vegas, September 2nd and 3rd. It's geared toward veteran investors, active duty people, because there's some awesome assets, resources that we can tap into, like VA loans, and we have an amazing network. So we're trying to get all those people in the same room. But we're calling that the Financial Freedom Summit. And if you're listening and you want to go to that, if you're a veteran or an active duty investor, your partner is like, you can just buy tickets on my website, bcglobalinvestments.com/financial freedom summit. And it's going to be awesome. We're going to bring 500 people there, but I love bringing these people together. And I host my meetup. I know you spoke at that. You were actually my very first speaker at that one, Brandon, like a year and a half ago. But I just like getting all these people together and networking and growing and stretching. And then I literally have the same model going in my real estate business. I'm with eXp Realty. I can bring on agents from any state. And I just love being able to network with people who are pursuing the same things that I do. And I've grown a couple of businesses. I don't actually like being a realtor. I don't like helping people buy and sell houses. I don't even do my own transactions. I hire realtors to do those for me. Because it's not something I enjoy doing. It's not where my genius is, but I love to help other agents grow their businesses. And for me, it's all about figuring out your why, figuring out what you want your life to look like, and then creating that life and sticking to that life every single day. And so that's why I host the conferences. That's why I grow my real estate team. And that's why I invest in real estate.
I love it. For those that want to learn more about you, learn more about the opportunities you have on your agent side of things, learn more about the Financial Freedom Summit, where would you steer them?
Yeah, my website is the best place, bcglobalinvestments.com. You can find me on all the social medias. I'm on LinkedIn, just Erin Helle. Facebook, I'm the Erin Helle, and Instagram, I'm the Erin Helle _investor coach.
And if you didn't miss that or write it down, don't worry. We're going to put that at the bottom of the show notes here. Erin, this has been awesome. I loved having this conversation with you today. It's been really great catching up with you. I'm super excited that you've got this awesome summit you going on. You're doing really, really well. And the future's really bright for you. Thanks for coming on the show.
Thank you so much.
Hey, see ya.